This is the video for Friday, March the 26th. We might go a little bit longer than usual because I'm going to look at a number of stocks that people have mentioned in the comments of recent Alibaba, Facebook. And we're going to go back and we're going to revisit BLDR, which I said that we weren't going to follow anymore because it's had two pop-up days in a row, and it's getting interesting again. So here's the McClellan oscillator, and we did expect a bounce when it was oversold like this for 2 days, and we got it. We didn't know what we were going to do, if we were going to come back down with the bulls in charge, but certainly the bears in charge, but certainly the bulls kicked into high gear, particularly at the end of the day, so that we finished just below the neutral line. But this is still a complex pattern for the bears that's gearing up, and that can only be broken if we have another update on Monday. The overall market looks something like this, but look at this pop into the close. That's really interesting, and everything was green except for Disney, Google, and Tesla. But everybody else had a big day, including the financials and healthcare, and the advancers to decliners were about 3-1. That's why we had that pop. So now let's look at the big charts because we made some new highs. The Dow Jones Industrial Average, I should have refreshed my modem. Look at that. Not a new high, but a new closing high. The new high would have been right here at the top of this candle, but the previous closing high was right here. So the Dow Jones made a new closing high, and it's popped up above this Fibonacci of 127.2 that was so long resistance. It would be really nice to see it come back down and test this perfectly, and then you have a good idea that it's going up to 33,906. The NASDAQ, which has been the one that's been trailing and has been disappointing, look at where it, this is where it ended the day right here. So I drew a green line across there. And that really, the Chico span was not much in play today. It was just a big day for the NASDAQ where it was up. We had a range of 270 yesterday, so that's pretty big. But we're looking at resistance here at 1351, and then resistance again when the Chico span hits the 50. But so far it looks like a nice bit of recovery. If you look at the stochastic momentum indicators, you've got the long term is starting to trend up, and the faster mover hasn't quite found a bottom yet, but is close to finding a bottom. The S&P had a big day, and it didn't create a new high so much. It may have by half a point or a point, but on this big scale here, it looks like it finished exactly where it had back here on the 17th of March, St. Patrick's Day, and we just tied for a new high. So now I've got a double top. But look at the Chico span. The Chico span has broken out and is now above the candles and above the 8, and only dipped below for 2 days. So that's impressive. Now this is pretty bullish, but again, if we look at, I don't know if the stochastic momentum indicators really work for the S&P 500, but if they do, then this really shows that we are at a high and the signals are for going lower. So take that for what it's worth. Now let's start looking at our stocks. There's Builder that we talked about. Builder's first source. And we're going to see 2 big days in a row, but what keyed it off was this test of the cloud right here. Last time it tested the cloud, it bounced back nicely. The time before that, when it tested the cloud, it bounced up, tested the cloud, bounced up, tested the cloud, bounced up, and that's just a little dip below the cloud and below the 50 and then moved up. So this is a stock that really is following Ichimoku trends, and it stopped just below this Fibonacci that we had drawn of 200%. Now these are long-term Fibonaccis. You can draw shorter-term Fibonaccis. You can try to find the most recent waves, but you see there's no recent waves here. It's just all been one big wave going back from really July of last year, maybe even further if you dip back into here from early July. There's just been this one big wave where we've gone up and we've touched the top of the channel, bounce, 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 hit the bottom of the channel right on earnings. That wasn't a channel yet, it was just a trend line of 2 points. 3 points make a channel, came back up. Now we have 2 points to make a trend line. Didn't quite come back down here, but it did here. So now we have a channel with 3 points. And we're looking for the third point at the top of the channel, which would be somewhere over 50. I remember when we first looked at builder supplies on tip ranks, analysts were calling for 50 to 55, but take a look at tip ranks. If it gets over 46.97 and then gets over this area right here of its previous high, then you know it's going to $50. The volatility index, meanwhile, continues to reside basically in this calm zone right here because of low volatility. This is the time when you see the market moving up the best. We talked about MP, and we saw that we might have had a bat pattern because we had this 38% pullback, and then we had a move up. And we thought, well, let's not invest in this here because there is a possibility for a bat pattern to be happening, and darn didn't that happen. So now the bat pattern could be complete at 27.05, but it could also go down to 15 or 11 to meet the criteria of bat pattern. So MP was not really a good play. Now it should have been, because this is a company that's going to, it's an American company, Utah, I believe, that makes the metals that are getting harder to get, strategic metals, because they're really controlled by China and Mongolia. So it should have been a no-brainer for this to move up, but the technical traders are saying that's not the case. ALEC, my little biotech, just popped up. This is a drug that's going to do well on FDA news. It dropped when the FDA asked for more information on one of its drug applications. If they have a good phase 2 clinical trial on their Alzheimer's drug, which Abbott invested in, then we'll see a big move. Apple finished down 11 cents, is really just channeling. I think they're going to have fabulous earnings when they report in the latter part of April. ABBV, which I've been building up a position in now with 600 shares because it's a dividend stock, finished where? Right at the bottom of a very thin cloud. So it's going to be very easy for ABBV to push through this very thin resistance. Where is the Chico span? Right above the candles. So that would indicate that the next move is for ABV to push through the cloud. IBM, I added another 150 shares on Thursday. This stock is going really well, and it's just heading up to complete this Gartley pattern. 61.8 was right here, and that's sort of the average point of these 4 candles. So I'm saying that's a good Gartley. Pulled back into the Gartley range, not quite the full way back, but good enough. And now it's moved back and it's on its way to 143. So keep on adding to IBM. It's still a 5% dividend stock. Home Depot just cruising. I mean, just powerful. Wouldn't it be nice if I'd kept that stock all the way from back when we were first talking about it? But I didn't. JP Morgan, not a new high, but moving back up. NIO was my big disappointment. It could have been worse. Like other American companies, have had to close their automobile or their truck production lines because of a lack of chips. They've announced a 5-day furlough, so they won't be making cars, which means they won't be shipping cars, which means they'll have an earnings hit of 5 days. If you look at where it got its support yesterday after an initial big drop, it did move up. And why is that? Why did it just pick there to move? It was below the 200 and above the 200 SMA. Why? Because the Chico span came down and hit the 200. And that provided the support that was necessary for technical buyers to come in and take a look at NIO. Now, NIO has its stochastic momentum index, the fast moving one that's based on 12 time periods, is getting into the oversold. Could go a little bit lower, but not much lower. But the long-term one, which has been moving down now since right up here in January, has now bottomed out and now is starting to move back up. So keep an eye on that. This is a stock that's in a good position to buy. PRGS, that was the one that was doing a CD that bounced off of the 200, and that's a CD of a Gartley that we said we would trade, and I did put on 200 shares. I'm now back to close to break even. I'm watching this as it comes up to hit the top of the cloud. Where's the Chico span? The Chico span is, let's highlight it so we can see it a little bit better. And the Chico span is hit the bottom of the cloud a few days ago. Now finished where? Somewhere, well, right in here, actually, right in the body of that candle. So that's a good sign. Should pop up here and may even, break through this little gap here. But we're looking at resistances next at 44.62. Above 44.62, it means it's heading for 45.67, and then it's heading for 47.03 if you're looking at that type of a harmonic technical trade. Square continues to recover a little bit. It's just a nice stock that's sort of going up and down, and it makes big swings, so it's a really good stock to be selling short calls against. We're looking at resistance here. Further on ahead, the Chico span is in the cloud, so it's going to be subject to the murkiness of traveling in a cloud while the candles start to work their way up to resistance of the clouds there. Now let's go into finally some of the new stocks we've been asked to take a look at. Alibaba. Alibaba hit 38.2% on this Fibonacci. And which one is this? This is a Fibonacci. Let me just get rid of that tool. This is a Fibonacci that takes, I've got two of them here, so let's look at this one. This one takes this wave and replicates it off of this bottom, which was the December 2018. So we take this move and we place it at this point, and 100% would be right here. So to get back to that point would be 272.59. Now another Fibonacci that we're looking at, sorry, that's the 100%. The other Fibonacci that we're looking at is just, what is that? It's this big move here, this single big move, including the pullback, this big move, and it pulled back to 38.2% from this big move. That's an odd Fibonacci to look at because of the break that occurred in here. So if you're not convinced that that's important, then just move and look at this wave, and you can see that it pulled back to 50%. So you've got 50% on this one, 38% on that one. So whichever traders are looking at that's an important level at 224.57-ish. And Baba might be getting some rebound there now on the stochastic indicators. We have a little bit more to go on the 12-point average, but the longer term has bottomed. Here was its previous bottom. You can see that's the same bottom we had now. The last time we hit that bottom, we did this kind of a move up. So Alibaba, that was GT or GK in the comments who asked about it. Not a bad time to be buying. Facebook. Now this is pretty messy. Facebook's got a lot of Fibonacci's in here. This stop at 188.7. Now a pullback not quite to 161.8. I don't trade Facebook. I don't like their business model. What you have here is a channel that you can draw, which would be, right in here would be its top, right in here would be its bottom. And you're looking for a breakout of that channel, but by the time it does that, it's coming close to double topping. But if you're a technical trader, this does look like an opportunity to double top up here. It was rejected at this high, so we had a high here, we had a lower high, a lower high, a lower high. Then we came in, we made a bit of a higher high and pulled back. So now we need to make another higher high, which would be at least above this candle, followed by above that candle before you'd really want to step in there. And then you've got resistance up at 304. So it's not the best technical thing to get into, besides that it's expensive. But if you want to put on a call spread, buy a long call, sell a short call for the same expiry date, you're taking on less risk. That way, let's look at it on the Ichimoku. And on the Ichimoku, you had support for the Chico span 2 days ago on the top of the cloud. Now we've moved up. So it would indicate not a lot of resistance in here, but you do have the 50 to back you up. If you really like the stock, I wouldn't buy it, but I would buy a vertical call, and I would take something in April, and maybe I would do 280, 290, 280, 285, depending on how much you want to risk. Pretty long video today. We haven't looked at SONO in a while, but look at that pullback. This is an opportunity to buy. The low point was right here, and the high point, let's see, what did we do on Friday? On Friday we had a low point right here, which means that the Chico span got its support right on the top of that candle. So the Chico span responded to that candle, which means that SONO could be going higher. If you missed out on this pennant and this pennant and this channel, now's the time. And at $41, it's not expensive. So where would I put an alert? I would put an alert right there on the 8 EMA, and I would wait for a cross of 38.98, and then I would get back in. I would get into SONO because we've missed so many opportunities.